Hey everyone, it's Al Abaroa for Financial Intelligence Training. It's Saturday, it's October 10th, and it is 2020, which would make today 10-10-20. Numerologists have a field day with these type of numbers. So I'd like to wish my Taiwanese clients a happy double 10 day. And for you Superman fans, well, you know that today marks 16 years since Christopher Reeves passed away. Now today I'm wearing my black and red as a tribute to the Miami Heat for holding on to dear life, defeating LeBron James and the Lakers to push a Game 6. Fingers crossed that the underdogs can prevail. And prevail is exactly what the markets have done. If you've been watching the post over the last few weeks, I've been talking about the leaks in the dam, meaning the market's September swan dive. Well, today, the bulls will have something to rejoice because the major averages are now firmly back above their respective 50-day moving averages. Of interest to me is that the Russell 2000 is showing the greatest signs of life. Now, this is especially promising to me because of the majors. It was the only one to dip below the critical 200-day moving average, where it had two consecutive closes below the average on September 23rd and the 24th before finding its footing. Now, some of you may wonder, well, why does that matter? First, the Russell is made up of 2,000 stocks, so you've got to give that some serious consideration. I mean, it's important, and it's a growth index. Further, in my opinion, price behavior under the 200-day moving average is not what you want to see. It's at that line that institutional defense comes in, and if it's no longer present, well, you've entered into the void. And who knows where that takes you and how low the market can drop from there. For those of you that are interested in learning more about the technicals and the significance of price action and how it impacts your positions, just reach out to my office and we'll gladly send you a free video lesson expanding on that in more detail. Now, while I'm really liking the price action that we've witnessed in this past week, I think I'd be remiss not to point out just how fragile the undertone remains. You see, to me, this was evidenced on Tuesday's mini meltdown after President Trump's announcement that stimulus talks would no longer proceed. Now look, whether you sit on the left or whether you sit on the right, I think that we can all agree that when the president fires something out like that, there's a good chance that it's going to reverse course. Yet even with that at the forefront of most traders' minds, the sell-off was fierce and in short order. The market fell almost 2% in the immediate aftermath. Now, ordinarily, I would bucket this as market noise that an investor needs to filter out. However, I believe this really highlights just how fragile the current rally is. This market is not up on a strong economy. This market is not up on recovering macros. This market is up on continued financial engineering. The moment that just the mere threat of it not being administered, the market went reeling. For further proof of that, turn your attention to the ETF UUP. That's the symbol for the US dollar ETF, and if you look at the chart, you'll see the steady downtrend that it's been in. It's so bad that they might want to reconsider the symbol name from UUP to DWN. I mean, it really looks that ugly. The 50-day moving average fell under the 200-day moving average back in June. That's known as the death cross. The continued slide since then tells you why it got its nickname. Now, why does all this matter to you and your money? Well, typical portfolios are built on strategic asset allocations with the goal of such an allocation to help you manage risk. All you've got to do is speak to me once to know that I am a firm believer that you cannot diversify away systemic market risk with asset allocation alone. Watching the markets is what we do. Understanding the risks that they present and how to manage that is the key in today's environment. In my opinion, this takes more than just the reliance on an ever-running bull and an undying allegiance to your current portfolio's allocations. As always, I suggest that you monitor your risk, know what you'll do as the environment changes, and be prepared to defend when needed. I'm Al Abaroa. This is Financial Intelligence Training. Thanks for watching, everyone. Have a great day.